Palantir Technologies could be on the verge of a major move higher, with one Wall Street analyst suggesting the stock has the potential to climb nearly 40% from current levels. The renewed conflict involving Iran has shifted investor focus toward national security and defense readiness, and that shift may remove one of the biggest concerns that has followed Palantir for years. Critics have long argued that the company is simply a wrapper built around artificial intelligence models created by others. However, rising geopolitical tension is forcing a more serious evaluation of what actually matters in military deployment environments, and in that setting, integration, reliability, and secure implementation often matter more than who built the core model. Rosenblatt analyst John McPeak believes the current global situation is revealing Palantir's true strategic value. In a note to investors released on Tuesday, he wrote that war, despite its tragic consequences, underscores the importance of a full operational platform like Palantir rather than relying solely on standalone large language models. McPeak emphasized that the evolving conflict is likely to highlight Palantir's structural advantages and bargaining leverage compared with model developers such as OpenAI and Anthropic. Notably, McPeak had only recently initiated coverage of Palantir with a buy rating. Shortly after, he raised his price target from $150 to $200. That represents a substantial increase in expected upside. On Tuesday, shares of Palantir climbed 1.4%, finishing the session at $147.22. While that move may appear modest on the surface, analysts often view incremental gains during uncertain geopolitical moments as signals of underlying institutional confidence. Before the latest escalation between the United States and Iran unfolded over the weekend, the Defense Department had already indicated it intended to award larger and longer duration contracts to companies whose weapon systems had proven effective in real-world conditions. That policy direction alone was supportive for established defense technology providers. However, the onset of open conflict adds urgency. Stifel analyst Jonathan Sigman wrote to clients that heightened tensions could make military spending both more immediate and less politically controversial. Historically, periods of conflict tend to accelerate procurement cycles and reduce bureaucratic friction around defense budgets. President Donald Trump reinforced this tone when he stated on Truth Social that the United States has a virtually unlimited supply of these weapons. He also acknowledged that at the highest capability levels, supplies are solid, but not yet where policymakers would ideally like them to be. Such remarks signal a continued push towards strengthening national defense inventories. When policymakers emphasize readiness gaps, capital typically follows. This macro backdrop could materially benefit Palantir Technologies. McPeak argues that global instability increases demand for comprehensive and unified solutions rather than fragmented software tools. Modern warfare is increasingly data-driven. Intelligence gathering, logistics coordination, threat detection, and battlefield simulation all require seamless data integration across multiple domains. Palantir specializes in creating platforms that fuse vast datasets into coherent operational dashboards for decision makers. In chaotic environments, that capability becomes mission critical. A clear illustration of this dynamic occurred in July, when Palantir secured a contract from the United States Army that consolidated 75 separate agreements into a single 10-year deal worth up to $10 billion. The significance of this agreement extends beyond its headline valuation. Consolidating dozens of contracts into one long-term arrangement reflects trust, dependency, and strategic alignment. It suggests the Army prefers a unified platform partner rather than juggling numerous siloed providers. Financial performance further supports the narrative of expanding government reliance. During its most recent quarter, Palantir generated $570 million in revenue from United States government contracts alone. For the full year of 2025, revenue derived from United States government work reached $1.9 billion. That figure compares with $1.2 billion in the prior year, marking substantial year-over-year growth. This increase is not trivial. It represents hundreds of millions of additional dollars flowing into the company's ecosystem, reinforcing the depth of its federal relationships. Meanwhile, complications have emerged for Anthropic. McPeak noted that hostilities with Iran began shortly after contract negotiations between the Pentagon and Anthropic deteriorated. Anthropic, which carries a valuation of $380 billion, has publicly expressed concerns that its Claude model could potentially be used for mass surveillance or autonomous weapons development. That ethical hesitation created friction in negotiations tied to defense applications. In response, President Donald Trump directed federal agencies to transition away from Anthropic's models within 6 months. Additionally, the Pentagon classified Anthropic as a supply chain risk. That designation restricts military contractors from maintaining commercial relationships with the firm in certain contexts. Anthropic has argued that the Defense Department may not possess legal authority to extend such restrictions beyond direct Defense Department work. However, regardless of the legal debate, the operational impact remains significant. McPeak believes the 6-month transition window offers sufficient time for agencies to shift toward alternative models without disrupting mission continuity. Although Claude has previously been deployed in at least one high-profile mission through a partnership with Palantir, the analyst contends that Palantir's platform flexibility allows it to substitute competing models as needed. This adaptability is central to the bull thesis. If Palantir can integrate multiple large language models and deploy whichever option is approved for classified use, it effectively becomes model-agnostic infrastructure rather than a dependent reseller. During active conflict, the primary application of large language models tends to focus on data analysis. This includes parsing intelligence reports, identifying anomalous activity patterns, summarizing battlefield communications, and generating predictive simulations. According to McPeak, Claude does not consistently lead performance rankings in this domain. Meanwhile, models developed by xAI and OpenAI are already integrated into Palantir's artificial intelligence platform and have received clearance for deployment in classified environments. Clearance in classified settings is not a trivial milestone. It involves rigorous security vetting and compliance standards. OpenAI recently stated in a public blog post that the United States absolutely requires strong artificial intelligence models to support its mission, especially as potential adversaries increasingly incorporate artificial intelligence technologies into their own systems. That observation reflects a broader technological arms race. Artificial intelligence is no longer confined to research labs or commercial chatbots. It is becoming embedded in cyber defense systems, drone navigation frameworks, logistics optimization engines, and strategic planning platforms. From an investor perspective, the argument advanced by Rosenblatt rests on a crucial distinction. A standalone large language model can generate insights. However, a secure enterprise-grade platform that aggregates data, applies appropriate models, enforces access controls, and delivers actionable outputs to decision makers provides a different layer of value. If Palantir occupies that orchestration layer, then it stands in a structurally advantageous position, regardless of which underlying model ultimately proves superior. Geopolitical instability often compresses time horizons. Decision makers cannot afford experimental deployments when national security is at stake. They gravitate toward proven systems with established compliance records. Palantir's multi-year history, working with intelligence agencies and defense institutions, positions it well within that context. Therefore, the nearly 40% upside suggested by McPeak is not framed purely as speculative enthusiasm. It is anchored in the expectation that defense spending will accelerate, that contract consolidation will continue, and that regulatory headwinds facing certain model developers may indirectly benefit platform integrators. The broader takeaway is that technology markets do not exist in isolation from world events. Artificial intelligence adoption in the commercial sector may drive headlines, but defense integration can drive durable revenue streams. In moments of instability, clarity emerges regarding which tools are essential and which are optional. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.